All right, let's get this show on the road. How's everybody doing this morning? Hope you had a good weekend and a good Monday, and we're up and ready to go again. All right, there's a number of things I want to talk to you about today. First of all, as we set out on the little marquee, um, let's see. Okay. Um, First of all, out on the little marquee, it says we're going to look up some AI stocks. And I'm going to show you some good AI stocks. But actually, I'm not just going to give you a list of AI stocks. Anybody can do that. You can go out and grab old Chat GPT and you can say, give me a list of AI stocks. And you can pull them up. You'll have a whole list of AI stocks that fast. Why would you need me to help you do that? You don't. So what we're going to do is we're going to go through and we're going to run an exercise. I'm going to show you how to find the best AI stocks. Best, okay? How do we know what the best AI stocks are? Well, the best AI stocks are ones that some of these great big huge hedge funds are investing in. You're like, well, how do I find out that secret? Because that's something you want to know, right? I mean, if you want to find out what are the best AI stocks, you got to find out what the great big boys are investing in right now. Because there's a lot of AI stocks out there. Some of them are junk stocks, and you don't want to be investing in the junk stocks. You want to be investing where the big boys are putting all their money, because that's the ones that are going to rise, whether they're good or not. I mean, those are the ones that are going to rise. But they're pretty good at doing their research, right? And so they're going to be looking into these stocks. And it's like, well, do I need to do a whole bunch of research? You could. Be a nice way to do it, but how good are you at researching into other companies to find out how well they're doing? Why not just let somebody else do all the research for you and then say, well, I can go do the technical analysis on the markets that you've researched from a fundamental point of view. Now, remember, the fundamentals drive the long-term trends. The fundamentals are the hardest thing to know and learn about a stock, because the fundamentals are the internal workings of the company itself, right? It takes a big company to kind of wiggle in and find out what's going on with an individual stock. I mean, you and I can do the little surface stuff, but we're really going to see nothing more than their sales literature. So you really want to know somebody or have somebody who's got the ability to go and read their real true fundamentals, right? All of those government reports that have to be given every month or every quarter, every year. Look into their taxes, look at their PE ratios, look at all that kind of stuff. And because these great big funds, they like to do that. They like to dig in deep. They like to really know the meat and potatoes of something before they buy it, right? And wouldn't it be nice if we had that ability too? You're like, yes, but I have GBT. Well, that's true. You can go and do all that research on stuff, and I'm not saying not to do that. You certainly can. But if somebody's already done all that work for you, why not just piggyback off of what they've done? Now, there's two things that I want you to think about when you think about the stock market. There's basically two ways. There's more than two. Okay, we're going to set aside some of the other ways, but there's two basic structures to the stock market when we're trading. All right. Now, I oftentimes say that the stock market is like a sandbox. All right. It's designed in such a way, in such a fashion, that it's almost like, the wild, wild west. And you can go into the stock market, both guns blazing, and you can do whatever you want in there. All right. There's a few guardrails where you might get shot yourself, but that's okay. At least you get a shoot. Right. It's a shootout. And so you can go in there and you can basically do whatever you want. And so if you're not smart enough, if you don't have the brains to go into the stock market and create a structure on how you want to build your business or build your portfolio, you're probably going to get shot up by somebody else. All right. So what happens is most people go into the stock market totally unaware, totally not understanding the concepts of what the stock market really is. They get themselves a couple of six shooters and they go out there and they even buy a horse sometimes and go out and they start shooting up other traders, and then they just get blasted away and there's nothing left of them. All right. And they lose all their money. They lose all their bullets. You have to have a plan, right? You've heard it said a million times. Plan your trade and trade your plan. Now, the stock market being a financial sandbox, you can go to the stock market and everybody's in there shooting each other, right? You can go in there with a plan and you can say, okay, I realize that the stock market is a sandbox. And in that sandbox, I can build any kind of a structure I want. But if you don't know the structures and you don't understand that that's what the sandbox is, or the financial market is, you go in there unaware and you just get shot up by everybody else who's already got plans. All right. So you have to have a plan. Now, I want you to think about the stock market in two ways. All right. There's the wild, wild west side of the stock market where you can go in there and you can build your own portfolio. You can say, oh, look at all these great stocks that are in here. Oh, these are wonderful stocks. All right. There's thousands of them. I'm going to go in and I'm going to pick the very best ones and I'm going to put them into my portfolio and I'm going to watch them all rise. And a lot of people will do that. That's very common. I like to do it sometimes. It's a fun way to trade. All right. To go in and build your own little portfolio and buy all these stocks. And it's called speculation, right? Because we have no idea. We just think, hey, Apple's a great stock. Oh, I heard this great news from Apple. And so I'm going to buy me some Apple stock and I'm going to be rich, rich, rich beyond my wildest dreams. And I'm going to put that in my portfolio and I'm going to build myself a portfolio, right? Or you can think about the other side of the stock market where there's actually big companies that go in and do that. They like to do that too. All right. They're going to do the same thing as you. They're going to go in and they're going to build these portfolios. They're going to go and pick all the stocks. Now, again, it comes back to our original conversation. How good are you at picking stocks? Are you really good at that? I mean, you really like get into the PE ratios and you know all this, how much money the companies have made, and you've put all those numbers together and you understand all that stuff. And let's go in and look at that stuff so you can get familiar with it. All right. So you can really just get in there and you can say, look, I'm just so good at this. We're going to go in and look at this stock. Let's go in and look at Apple, because Apple is such a great stock. All right. So we're going to come over here. We're going to use this little FinViz thing because FinViz has a little thing in here. Come on, I can't get Apple to come up. Come on, Apple. Everybody loves Apple. Apple got some good news. They came in here. I laughed about them the other guy. Trump came in and said, hey, what are you guys going to do? Are you going to get shit or get off the pot? And they said, well, we're going to shit for a little while. And so they did. And they sit there and shit. And then Trump says, oh, well, if you keep shitting off over there in China, we're going to nail you with 100% tariff. And suddenly Apple decided, oh, we want to get off the pot. And so they went in and they brought him in and trailed him in. I can't believe he did this. Trailed him into the White House and said, tell everybody what we got you doing here. Control it, Apple. Well, if we don't do what Trump says, he's going to nail us with 100% tariff. So you know what we decided we're going to do? We're going to bring $600 billion back to America so that we can avoid these 100% tariffs. They weren't going to do it before. They were like wholly owned by the Chinese. Well, they still are, but bringing $600 billion back into America. Because if they didn't, Trump was going to punish them with a 100% tariff on their shit. So I kind of laughing my ass off. And if you don't do it like you did last time, say you were, and then you didn't, we're going to tariff you on the back taxes. No. Okay, Mr. Trump, I promise I'm going to bring $600 billion to America and open up new factories. All right, you better come into the White House and tell everybody that you're going to do that. And if you don't, I'm going to tell them that we're going to tariff you at 100%. I couldn't believe it. It was like, spank him, spank little Apple. And so here, that's why their stocks started to rally a little bit, I think. Anyway, I thought that was the most hilarious thing I've ever seen. I've never seen anything like that before in my whole life. It was hilarious. You know me, I don't like Apple. I think Apple's a horrible company. I like their products. I just don't like the company. Anyway, that's neither here nor there. As we come back around, are you a good picker of companies? Do you know how to read all this stuff down here? Can you come in and look at the earnings per share? Can you look at the sales per billions? Can you see the outstanding shares? And look at that and tell me, is this a good company to be in? Now, I'll tell you just right off the bat, just boom, this fast, I'll tell you no way. There's no way in hell I'd buy Apple. I don't like Apple. Why? Well, the earnings per shares are flat. They haven't been making any money for the last 4 years, 5 years, 1, 2, 3, 4, and this year, no money. Sales and billions are flat. They haven't increased their sales, nothing, dead. And then they're buying all their shares back. Look at this. 16,000, season 43, and they're going down, 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 down. That's not good when you see that. They're buying their shares back and they try to pass it off as if that's a good thing. Now, oh, we're giving you your money. We're sharing our profits with you by increasing our share price by buying them back. Bullshit. That's bullshit. What they're doing is they're propping up their earnings per share. Earnings per share. Okay, well, they're flat. You ain't got no earnings per share because you're buying all your damn shares back. You keep pulling your shares off so that your earnings per share stay up high. You talk about people complaining about NAV decay. That's called NAV decay right there. They're buying all their shares back because they ain't making no sales. And so it's propping up their earnings per share. If you have earnings of this amount and you have this number of shares, they divide the two by. And if anybody knows any simple math that you learned in third grade, you know that if you divide those numbers, it gives you a number, and that's what you get for earnings per share. Well, if you keep buying your shares back, getting less and less and less shares, your earnings per share are going to go up. Well, they're buying their shares back and the earnings per shares ain't going up. That's a shitty company. Don't buy that company. Could you buy that company and make some money? Sure, you might be able to, but over the long run, that's not a good sign. This is really not a good sign. Apple is not a strong company. Are they a big company? Yeah, they're a big company. Are they a strong, growing company? No, they're not. And they don't even give you hardly any dividends at all. Their dividends are why bother dividends? They're just they tell you every now and again they give you 26 cents on a share, which is $228.26. It's like, why bother? Oh, because it's good PR. It's good PR. Apple is a shitty company. All right. Unless they can get their shit together and go back to the days when they were a good growth company, they need to get their shit together. This is not a good company. This is a bad sign. All right. So anyway, if you can read all that stuff and you can tell all that stuff and you know how to read all this stuff, then you can do your own research into each company and you can figure out whether you want to have it in your portfolio or not. And that's the point I wanted to make. And the fact that I use Apple as the example probably has a little bias to do with the fact that I think they're a shitty company. They shouldn't be buying their shares back. They should be selling enough shit that they don't have to do that to keep their earnings per share propped up. All right. This is how they prop up your shares. And then they sell it out to you as if it's a good idea. Hey, of course it's a good idea. We're buying our shares back. This is going to make you more money because it's going to keep our shares price high. Yeah, it's going to keep your share price high because you ain't making no sales. And it's the only way you can prop your stock up so that we don't sell it all out and go buy somebody who is making any money. Anyway. That's how you read those numbers right there. And Apple is a perfect example, and they have been for what 1, 2, 3, 4, 5, 6 years, which is why I haven't liked them for 4, 5, 6 years. Any of you guys who followed me know I've never liked Apple. They're a terrible company. All right, because they constantly buy their shares back. They don't make any, they're not increasing in sales, and their earnings per shares are flat, which means they suck. All right. So anyway, there you go. Do I own any Apple? Yeah, I got some. Did I go buy it individually? Did I just go buy some shares of Apple and put it into my portfolio by myself? No, I haven't for like 5 years. I don't trade Apple. Why? Because it's a shitty company. So I have Apple though, but I have it in a fund, right? An ETF, exchange traded fund. So if you take your model and remember the stock market, we're going to break it down into 2 factors. You're going to go build your own fund, or you're going to let somebody else trade your money for you. And if you let somebody else trade your money for you, you give them your money and then they go and pick all the stocks. So if you're good at going in here and evaluating and discovering that, hey, everybody thinks Apple is a great company, but the reality of it is it's a shitty company. So did you think Apple was a good company? A lot of people do. But you've been sold a bill of goods. You've been taught through media that Apple is a great company, and they're not. They're a shitty company, and the numbers show it. Did you know that? That's the question I'm trying to get to the point of. Did you know Apple is a shitty company? All right. For the last 5 years, they're a shitty company. All right. So you might accidentally, not knowing that Apple is a shitty company, put it into your portfolio. And then you would miss out on the possibility of getting a good company into your portfolio and getting some good growth because you buy based on, rumor and tips from your uncle, right? Don't do that. So the point that I'm making is you can go out here and you can come into this wild, wild west and you can try and build your own portfolio based on your knowledge. Okay. And so Or you can go to the other side of this market and you can say, there are professionals out here who already picked their portfolios for me, and I can just give them my money and they will trade it for me. All right. Depending on how you feel and how comfortable you are, you might want to do a combination of both, which is what I do. I like to have some people trade some things for me, and then I like to trade my own things. It used to be that I used to like to trade all my own things. All right. I was like, oh, I'm a cowboy. I'm going to come in here with my 6-shooters and I'm just going to trade on my own. And I've done okay in my career. All right. I can't complain. I've been all right at doing that. As I get older and wiser, I've discovered that it's probably better for me to let some other people trade some of my money. And then I just kind of, when I find a really good opportunity that I just can't pass up, I take some of that money and put it in there and see if I'm a good picker. All right. At a good time. So I've gone from having all my money over with these guys, doing it all myself, over to kind of having more of them guys, professionals, trade my money. And then I just do a little bit myself over here, kind of dabble over here a little bit more. And it's been good. All right. I can sometimes pick big winners and get the 200% climbs and the big increases in money. And oh, look at how smart I am. I picked this one right. No, I picked that one right. Because I sit here in front of my computer 8 hours a day doing this kind of stuff. So I get pretty good at it, right? But even the fact that I sit here 8 hours a day and work on this stuff, I'm still doing better by letting other people trade my money for me than when I try to do it all by myself. Now, it doesn't mean I want to stop doing it all by myself. I still love to do that, but I've been more stable by letting other people trade my money. So I'm putting my money more into other firms, big firms that do this for a living and smarter than me, believe it or not. All right. And they're able to keep a more stable growth pattern than I was when I was all over the place, up and down, shooting with my 6-shooter, getting all, shooting all the bad guys in the arena. All right. Hold on a second. I'm losing my voice already. Look at me. All right, let's try this again. So the point that I'm trying to make is you can find some good places to put your money and let other people trade it for you while you then go off and do some of your little 6-shooting on your own. But don't try and do all the 6-shooting on your own in the beginning. And maybe never. Maybe I would advise that unless you're really super good at this, that you never try and do 100% of the 6-shooting on your own. Maybe you never do that. Okay. Maybe you just have to accept the fact that I'm never going to be a really good 6-shooter. I'm not going to go out there and shoot everybody up with my 6-shooter in this wild, wild west by myself. I'm going to let some other guys trade my money, and I'm just going to dabble a little bit over here on my own while I've got some security. Not really security. I mean, there's never security in the stock market, trust me. But at least it's a little bit more stable. All right. It's not going up and down quite so hard. Those guys are going to keep a little bit of stability while you can be over here playing. All right. So the question that we have in here, and the little marquee out front, the reason I'm going to bring this around full circle and give you a nice little lesson is because I want to show you how to find some good stocks and some good funds. I'm going to show you a good way to find some funds, or I know some good funds that we can go look at, and I'm going to show you how to find the good stocks that those funds are trading, because we're going to kind of backpack on somebody else's hard work. All right. So one of those companies, and we talked about them and we need to go through and look at the stock market too. We need to do a little analysis on the Qs and the S&P, but we'll do that towards the end of the class. We're going to go talk about what we think the market's going to do overall. All right. So we're going to go in, and I have a company, and I mentioned them, and I brought them up before in a previous class, and then I had a student ask about them. So I thought it would be very advantageous for us to go look at this company and use them as our lesson. And I want to also show you that this is how I did this fund. All right. So when you come in here, and I created my own fund, all right, I create my own funds. That's what I do. I'm going to show you how I do it. See, this is called Lan's Richie Rich Fund. All right. Remember, we've talked about that. These are some of the very best stocks in the stock market. Well, how did I come up with the top 10? All right. So these are the top 10 stocks in my Lan's Richie Rich Fund. And then this is the top 20. So, or 10 more. So that would make it the first 10 plus this 10. These are stocks that we like to trade. Okay. And then as we come down, we go down to the next 10, which is the top 30. So I have 30 stocks in the Lan's Richie Rich Fund. So if you wanted to know what Lan's choices are for some of the very best stocks in the industry, you can come and look at Lan's Richie Rich Fund. And how did I come up with these names? How did I choose these companies to be in my exchange traded fund or in my portfolio? It's not really an exchange traded fund because it's not available to the world to trade. It's my own personal portfolio. So how does Lan find the Richie Rich Fund? I'm going to show you. Okay. What I do is I piggyback on other people. As smart as I think I am, I realize that there's big companies on Wall Street that are smarter than me. Oh my gosh. I know it's hard to believe. But there are, and you have to just kind of admit it, that these guys are pretty good at what they do. All right. They're big, huge firms. They have large staffs that do lots of fundamental research. And that's the thing that you and I, as small speculators, lack. We lack the ability to do fundamental research. So we really get information. By the time we get it, it's almost too late to participate. All right. And the news and the information that we get is fed to us by a machine that wants us to be led around by the nose, right? We've talked about this before. That machine is the great big hedge funds and banks and all the big financial institutions that are trying to take our money, all right? They have all the money in the world. The only money they don't have is our money, and they want that too. So what they're doing is they are the ones who control not only the financial industry, they control the whole damn world. All right. They're in charge. And so when you ever talk about the deep state or the who's that underground people who run the world, it's the financial institutions, it's the banking institutions, and the banks are actually even controlled by, the big top organization, World Bank style people who are in control of all the money of the world. All right. Those guys are the underbelly of the whole society, and everything is controlled. We live in a simulation of a world. We think we're all, free and doing all this stuff. No, it's all handed to us, nicely put on a plate for us so that they can make money and be in control and run the world the way they want it run. All right. So that's how everything works. And so we have been given a little bit of information through the media sources that they want us to receive. All right. They're wholly owned by the banks, the big institutions, the big financial places. And so they get to divvy out to us what they want us to do. So they lead us around by the nose. They make us think certain things. They, make us feel certain ways. And some of us feel like we're a little bit cavalier, right? Because we don't believe the media. We don't believe the news. We don't follow that. We kind of go off into our own thing. And so you get this little group of people who kind of like feel like they're, the rebels, right? Like in Star Wars. So we're trying to be the little rebels, and we don't like to follow the rules. And so not very popular. Why are we not popular? Well, because the big institutions don't like people who are rebels. So we're going to be a little bit of a rebels, but in the financial markets, you have to kind of discover who these guys are, and you want to piggyback off of them, and you want to learn from them. That's why I talk about all the time. I talk about the you want to be able to do the accumulation distribution models based on the Wyckoff theory, right? And so the Wyckoff theory, you have to think about Wyckoff as he was like one of the very leaders of the rebel group. All right. He wanted to go in and he wanted to find out what these big institutions were doing so that he could play against them. All right. So he would know how to trade them. So remember, last week, we talked about there's two basic structures two basic traders within the market. Wyckoff always wants you to think about the market as only two traders. There's the big institutions and there's the retail traders. You and I, we're retail traders. All right. So we're in the retail trader camp. And then there's the big institutions. There's only two traders. That's it. Okay. And they have to buy and sell with each other. So they buy and sell with each other. That's how the whole market works. It's two traders. So you are in either this camp or you are in this camp. But if you want to be a smart trader, you have to understand how this trader thinks. And so that's what we're doing in this. That's what I do here in this class. I try to help you understand what the big traders are doing. All right. Because I come from that arena. I come from there. I worked in that world for a long time. That's where I got my education, was in that world. So then I come over into the retail world and I try to teach the people in the retail world what I learned about how these nasty boys do their business over here. Now, they're not nasty boys. They're not nasty boys and girls. They just have a job and they do their job and they're very good at it. All right. So they take our money and that's how they do it. And so I want to teach you how they take our money, take the retail traders' money. They have trillions and trillions and trillions of dollars because they've been so good at taking our money. All right. So that's what we want to do, is we want to figure out how they trade and what they do so that we can kind of counteract or trade against that. So for every buyer, there's a seller. And usually when you, as a retail trader, you're buying, when the retail traders are buying, it's the big institutions that are selling to you. And so you have to understand, when they're buying, who are they buying from? They're buying from the retail traders because the retail traders are selling. Well, if the big institutions make 80% of the money, why are you not doing what they do? Or at least learning what they do so you know that when you're selling, they're buying. Why are they buying what you're selling? And if you're selling, if you're buying and they're selling, or by the other way around, if you're buying and they're selling, or they're selling and they're buying, why are you always on the opposite side of the trade? And why do they always make money and you always lose money? So that's the whole concept we need to understand, right? So when you're coming through and you're trying to build your portfolio, one of the best things that we can do is we can go through and we can discover what they're doing. What do they know that I don't know? And what they generally know are the fundamental nature of markets. That's why we, as small speculators, we focus on the technical trading. Because as the technical traders, we can look at a chart because they can't hide what they're doing in the chart. The chart is the secret behind what they are always doing. Those big boys that are over there, the only way we know what they're doing is by looking at a chart. We can look at a chart and we can tell what they're up to. All right. So if they're trading a big chart, if we know, if we've learned, and I'm going to show you how to find out, we learned that they're going to trade a big chart. All right. They have VLO in their portfolio. How do we know that? I'm going to show you how we can find that out. And then once we know that they have VLO in their portfolio, we're going to come up and we're going to pull up a chart. And we can look at a chart and we can start using technical analysis, which is the stuff I teach in this room. Right. And of course, you can go get my book, which kind of pulls all this stuff together. Lan Turner on Amazon. Buy my book. No, I'm not trying to pitch my book. I don't make a damn penny on that thing. Amazon takes all the profits. So don't worry about, oh, Lan's just pitching his book. I'm giving you my book because I wrote it all down for you. It's like people ask all the time, Lan, you're teaching this stuff. Did you write it down? So I'm taking notes as fast as I can, but did you write it down? Yes, I did. I wrote it down for you and I published it in a book. It's on Amazon, Lan Turner. It's 8.5 by 11. It's a big workbook. It's got all this stuff in it that I talk about. I don't make any money off of it. I didn't charge enough money to cover hardly anything other than the printing. It's a full color printed book and it's on Amazon. You can go get it. I wrote it all down for you. Amazon makes the money, not me. I don't make hardly a penny off of it. So don't think that I'm just pitching books out here. I'm trying to help you. All right. So what we're going to do is we're going to come in and we're going to find and discover what these other big firms out here are trading so that we can, if we want to, be the six shooter, we can build our own portfolio. Or if we want to, we can just ask them to trade it themselves. All right. So this is how Lan built his Richie Rich fund. He went into all these big firms, discovered what they were trading, some of the very best ETFs, exchange traded funds, who all have a big basket of stocks that you can give them, and they'll trade that big basket of stocks for you on your behalf. And then that's how I found out what to build my portfolio out of. I picked the very best stocks out of some of these big, huge funds and put them into my own portfolio. And then the way I trade them is I watch them from the accumulation distribution point of view. How are they trading them? And then I trade against that, understanding the trading strategy that we like to use. And for those of you who are familiar with it, you know that we use a 3-drive pattern. So we look for what we call an Elliott wave pattern. There's the drive 1, the counter trend, drive 2, the counter trend, drive 3, and then the counter trend. And we know that up at the top of the 3rd drive, it gets really rare that it goes to a 4th drive. So you can see even right here, just on this random chart that I just pulled up out of nowhere, it's got this exact same model built into it because this is one of the stocks that is very popular to be traded by big firms. Okay, so the fundamental nature of markets are built into this one. They love this chart. If you were to go look at the fundamentals, and we can probably do that, it's probably got some pretty good fundamentals, probably better than Apple. Let's go look over here just for fun. It's VLO, right? VLO. All right. Oh, this is not, I was wrong. I was wrong. Look at the sales are going down. They're buying their own shares back and their EPS going down. This is a shitty company, but it went up. Look at that. So there you go. There is a good example of what I'm talking about right there. Holy cow. All right, there you go. But they're buying that company. Some reason they like, look at that nice little 3-drive pattern. We're going into the ABC pattern. But that's what we can do is we can look at the technical side of it. If we want to look at the fundamental side of it, we come over here and read all this stuff down here. This is not good. This is not a good example for what I was talking about. Earnings per share is going down. They were going straight up. 20, 21, 22 is really good. And then the last 23, 24 is way down. Where are they at this year? Income right now is 790. Sales 123. Ooh. Well, it's 123 right now. And they were 129 last year. We still got about 4 months left. So they got 4 months to bring it back up. Are they going to be a 176? I doubt it. Anyway, and they've been buying their shares back. So they've been propping their, look at that. They've been propping up their earnings per share by buying their shares back, and their earnings per share is still going way down. This company kind of sucks. All right. It is what it is. That's how you know. That's what you do. All right. But it's nice little 3-drive pattern. So we can come in and we can use our technical analysis to help us decide when to get into these markets and when to get out. So you got accumulation, distribution. Now, a lot of people are going to come in and they're going to say, well, I'm just going to build my own portfolio and hold it forever. Well, that's stupid. If you're going to build your own portfolio, you should be trading it. All right. That's the point of having your own portfolio. So you have control that you can buy and sell throughout the cycle so that you can buy and sell and do better than just buy and hold. If you're just going to buy and hold, just go throw it all into the S&P 500 and walk away. Oh, I'm going to build my own portfolio and I'm just going to buy and hold for 40 years. Well, that's the stupidest thing I ever heard. Don't do that. Why would you do that? That's not even the point. That's the point I'm trying to explain. People who are just going to come in here and start being 6-shooters on their own, they don't know what the hell they're talking about. They don't know what they're doing. The whole reason you'd come in here and buy your own and create your own portfolio so you can trade it. And so you can do better than buy and hold. If you guys are just going to buy and hold, because that's, I'm just going to buy and hold, build my own portfolio and buy and hold it forever. What's the point? Just go put your money in the QQQ. You know, you're not going to be able to beat the QQQ. That's what that is. That's just a buy and hold. That's just a buy and hold. The SPY, QQQ, DIA, those are just buy and holds. That's all they are. If you think you're going to buy and hold, and you can buy and hold better than the S&P, or you can buy and hold better than the QQQ, or buy and hold better than the Dow, you're dreaming. All right, you ain't going to do it. The only way you beat those big indexes that are buy and hold indexes, because that's all they do. They just buy them and hold them. All right. So if you want to buy and hold portfolio, just go buy those 3, and they're going to outperform anything you can do. Promise. All right. The only way you're going to outperform those is if you come in here and actually trade them. You got to trade them. You got to say, okay, I got these 10 in my portfolio, and I'm going to trade them, actively make more money than, and I'm going to buy low and sell high. Are you good at buy low, sell high? Or are you one of these guys that says you're good at buy low, sell high, but you end up buying high and selling high, or buying high and selling low, right? It's an emotional game you have to play, and you have to be good at it. So the point is, we're going to show you how you find the good stocks that these guys are doing. And then I'm going to show you, look, why don't you just let them trade your money? All right. Let them do it. They're pretty good at it. They can trade it pretty good. I'm going to show you one company that's really super good at this. All right. And I brought them up in a previous class, and somebody asked me about them. So I thought this would make a good lesson. So what we're going to do is we're going to go over to a company called ARKK. All right. And it's ARK is the arc-funds.com. All right. ARC-funds. Now this is Kathy Woods. And I mentioned her before. All right. So this is the ARC funds. Now we oftentimes talk about different companies. We've talked about one of the funds I really like is another ETF managed fund company, right? Which is YieldMax. So you see me pulled up YieldMax. This is YieldMax. another company, I like to buy these guys' shares. All right. Another company is Granite Shares. All right. This is another managed company. I like to buy these shares. I got a bunch of these. All right. So these are the new yield boost funds they've added in here. Get out of the way. Come on. So we come in here and this is the yield boost. So these are the funds that I've got. Which one in here? TSYY. I got some of that. All right. And so there's several more in here that we can get into if we want to, but right now I just put TSYY into my account. So this is Granite Shield. This is Yield Max. And of course, this is TSLY. This is where you're going to find some of these other funds that do this. These guys do covered calls. So if you like trading options, well, you can go out and trade options on your own. Pull out your 6 shooters and start doing some options trading. Nothing wrong with that. Go ahead, give it a shot. I know some guys that done pretty well with it. One of them's right here, Tabor Quigley. This guy done pretty well, doing his own, pulling out, doing some pretty good trades with his options. Got himself enough money to buy himself a house, right? So you can do your own shooting, and you can do pretty well with it if you practice. So you can come in here and you can build your own portfolio. I've got my own portfolio. You know, I built my own portfolio of these Yield Max funds, but the Yield Max funds also trade for me. So I put my money in here and then they trade it for me on these individual stocks. This is kind of a new thing. And most of you know about this, so we're going to move beyond this. We talk about this in other classes, but I'm going to come back over here to the ARC funds. So this is the side of the market where we come in and we say, well, we're going to give our money to somebody else and let them trade it. Or you can go in, and the cool thing about this fund is that this is an ETF full of a basket of funds. Now, these funds here, what's different about Yield Max and Granite Shares is that they only trade, they've created an ETF, what they call an ETF, or a single stock ETF, which is really weird, all right? They're brand new. They only started doing it a couple of years ago. And Yield Max is one of the very first ones to ever do this. Now, over in the stock market, or in the futures market, remember, that's where I come from. That's my history. My background's from we used to do single stock futures. And it was so cool. I just loved them. And I've gone off on this before, so I don't want to belabor it. But I love the single stock futures. It just didn't take off in Chicago. Nobody in Chicago wanted to trade stocks. They all wanted to trade the commodities, right? And so when we opened up the single stock futures over there, they just couldn't make them work. Nobody wanted to come and trade them, so they had to close it down. But they were the neatest things in the world. They should have revolutionized. They should have taken over the world, but they didn't. So they died. And so now we're kind of seeing over in the stock market basically that same concept starting to rise up and rear its ugly head. Not ugly, I think it's beautiful, but it's coming into the stock market, and now they're doing single stock ETFs, which is kind of a counterintuitive, kind of an oxymoron, because ETFs are exchange traded funds, meaning they're supposed to be a basket of stocks. All right, somebody's going to come in and they're going to build their own portfolio and say, hey, we're really good at building portfolios, and we're going to take all these stocks and put it into here, and then we're going to trade it for you. All right, we're going to trade this basket of stocks for you and make more money than what you could do if you put it in the QQQ or the S&P. Problem is, most funds can't even beat the S&P, so you have to be careful with that. So there's very few that can actually beat the S&P, which is just the buy and hold. Just throw your money in the S&P or throw it into the Qs and just buy and hold, right? But these ETFs, they think they can beat it, and some of them can. Year after year, some will beat it, some won't. Some will be great one year and not the next great. But anyway, they're trading. That's the whole idea. You give them your money, you put it into this ETF, they will trade your money for you. Or you can build your own little fund and your own little ETF for yourself, which is what I've done with Lan's Richie Rich Fund, right? And so that's my ETF fund, but it's only for me. I don't publish it out there so other people can trade. I don't trade it for other people, but that's my fund. So the point is, you can build your own fund, and that's what most people think that they're supposed to do, or they can just give their money to somebody else and they'll trade it. So now these are a couple of companies that I have done that I like to have in my portfolio and that I'm trading. And so this is one that I think is one that we can do that with. All right, so we can come in here, and these guys have some really cool funds. So if we come in and look at this, let's really just their primary fund, their big one is the ARKK. So let's go look at ARKK. And this is their fund, just like you would see if you were looking at anybody else who manages money for other people. You come in here, and we're going to go over, and we're going to pull up, and I'm going to go in. I think I've already got the ARKKs in here. Let me see. Max Schwartz, UBI, Granite Shares, Kathy Woods. There she is right there. ARKK funds. So there are 1, 2, 3, 4. She's got more than 4. Those are the 4 we put in there last time. So she's got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 different funds that she manages. Now, she goes in and each one of these funds are invested into specific sectors in the stock market. So for example, if you want the ARKQ, this one is autonomous tech and robotics. So if you're like, hey, I think it would be really cool to invest in the robotics industry. Well, here's somebody who's really good at this and has won major awards for her trading capability, that she started this big company and she's got lots of research people who can go out and do all this great research. And then she creates a fund and she calls it ARKQ, and she'll trade your money. You give her your money and she will trade the autonomous tech and robotics. And they do all this fundamental work. They go in and they look at all the different companies. They decide out of the whole industry of tech and robots who they think is the best. Now they're going to probably, I don't know, but I'm going to make a wild guess that they're probably going to be able to do a better job of figuring out which companies have a better future than maybe you and me. What do you think? You think that maybe if they have a big staff of people who that's all they do for their whole jobs is to sit there and research companies to find out which ones might have the possibility of being the best up and rising company out of all the robotic firms in the whole country, which one are they going to give their money to invest in? They probably going to do a better job at that than you and me, just sitting here in our, in our little offices in our houses trying to say, well, I want to invest in the new robot industry. I think that's coming along really good. I see Elon Musk is making a robot. And, oh, I saw that other company over there making a robot. Maybe I'm going to invest in that kind of, go buy their stock because they have robots. Well, I think that this company might just maybe be able to do that a little bit better than you and me. What do you think? Maybe not. You might have a little tip that's going to be better than what they know. You might figured something out that they don't know. Not likely, but possible, right? So you could go off and do your own little thing. But if you thought that you might want to invest in robots, this might be a good place to come and look. Here's another one, general internet. Oh, I think the internet is going to grow. What are some internet companies? Well, ARKW has done a tremendous amount of study and work, and they figured out who all those good internet companies are, and they're investing in them. You want to know who they invest in? Well, we can do a little research into ARKW. We can figure out, we can piggyback off of them. Or we can just say, hey, look, you know what? They're pretty smart. I'm just going to give them my money and let them trade it for me. You could do that. All right. So let's come in here. Here's another one, genomic revolutions. So genomics. So I don't know. We have to define genomics, but I'm going to assume it has something to do with making drugs. All right. I don't know. But it's probably something with the genomes, right? The genome. I don't know. But if you're interested in that kind of thing, you can invest in the genome by going and looking at what ARKG is investing in and maybe pick one or two of those. Or you can just say, hey, look, Kathy, you're pretty good at this. I'm going to just give you my money and you can trade it in ARKG. Let's see if we can beat the S&P 500. That's the goal, right? S&P is the backbone. It's the standard. It's the standard of the industry. Let's see if we can beat the S&P. Here's another one. FinTech innovations. FinTech. I'm not exactly sure even what that is. Come on, give us more. Oh, there's another one down here. Hey, we missed before. So what do we say? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. She's got 12 funds. Space exploration. Oh, I want to invest in space. Space exploration, really good stuff. I think I'm going to be a space explorer investor. Well, you can go out and create your own portfolio around space exploration, or you can just come and give your money to Kathy, or you can come and look at what Kathy's investing in. And what's really cool is I want to show you something else that Kathy does. If you want, you can sign up right here on her website, which I've done, and I'm going to see if I've got one in here today. She actually has a newsletter. And this is one thing that's very unique about Kathy Woods, is that she will, I'm going to see if it's in here yet. She sent it today? Not yet. No, I haven't got my Kathy Woods email today. Did I save one? I thought I saved one in here so I could show you. Where did Kathy Woods go? I'm just looking through my email to see if she can sent my emails yet. She sends it out almost every day. Sometimes they come out twice a day. Or I don't know, maybe she only sends it once a day and I don't get it, and so it looks like it's twice a day. Anyway, she sends out an email that tells you everything she's buying and selling. So you can sign up for her email, and she will send you an email that says, I just bought this in ARKW. I just bought this in ARKG. I just bought this in ARKF. I just bought this in, and then she goes through and tells you which one's true. So now I just sold this out of ARKK. I just sold this out of ARKG. Now, the thing about Kathy Woods, you have to understand, these are actively traded ETFs. Actively traded. They're always buying and selling and trying to optimize and make these funds really, beat the S&P. So this is not a buy and hold. She does not buy and hold these things. She's actively buying them and selling them all the time. Here's another one, 3D printing. Oh, you want to invest in the 3D printing world? Here's one. Israel Innovatives. Oh, Israel's doing really well. Let's invest in Israel. Oh, you want to invest in a bunch of Israeli companies? Well, just come and invest in this one. She's already doing it for you. ARKB, 21 share Bitcoin. Oh, you want to invest in Bitcoin? Well, you can do that and put together all the companies that are involved in Bitcoin and try to build your own little Bitcoin ETF, or you can just give your money to her and she'll do it. Now, she's going to charge you a little bit of a fee to do it, but it's not very much, not compared to others. That is ARKA. So this is what's this one? This is another Bitcoin future strategy. So she has two different strategies on Bitcoin. She really loves Bitcoin. ARKD. This is blockchain. Again, that's another, not Bitcoin in particular, but it's another style of Bitcoin stuff, right? Digital currency. ARKZ, what's this one? Ethereum. Oh, you want to invest in Ethereum? I think Ethereum would be great. You want to go just buy some Ethereum coins? You could do that. Or you could come over here and Kathy Woods will go out and research the entire industry around Ethereum and find companies that are doing Ethereum, and she builds a portfolio around that. So that's pretty cool, right? Let's just go look at her ARK Innovations, because this is their most famous one right here, ARKK. And we're going to come over to track and trade, and we're just going to pull up ARKK, and this is what it looks like. All right, so that's ARKK. That's Kathy Woods. That's how well she's been doing. You can see right now we're in the second drive. Drive one, drive two. Man, this is unreal. I mean, to me, look at this. This is just crazy stuff. How fast she's gone straight up. Now, a lot of the stocks have done this. There's a lot of the markets just had been on this absolute tear, right? Remember Donald Trump said to buy stocks right here. He said, you should go buy stocks. And of course, all the Democrats went and sold all their stocks, sold out right there. So I don't know. I'm just being silly. I don't know what they did. But the stock market took off and went to the moon because of tariffs. This is really because of his economic policies. All right. And so, economic policies obviously are the fundamental nature of markets, and they have a lot to do with these markets and when to buy and when to get in, when to get out. We look at it from a technical standpoint, and we look for these little setups and triggers like this right here, right? So this is a nice little setup, a little trigger, we call a pennant formation that happens in the midstream of a big uptrend. We usually get two of those. All right. So is this the other one right here? Is this what this is right here? Are we going to get I can't ever draw with this the way they changed this tool on me. I can't ever figure it out. What the heck? I don't know. So like this, yeah, there we go. Okay, so now we got another one. Is this thing going to go up to the third drive and can shoot out the top? I don't know, but that's what it's set up for. I mean, that's kind of the trigger. That's the probabilities, right? Now, the higher we get into these drives, the third drive has a lower probability of success than the second drive, and the second drive has lower probability of success than the first drive, right? You have drive one, it's pretty good probability it's going to go into drive two. And then drive three is how big is that drive three going to go? Well, eventually the market has to digest its profits and come back down. That's why we have these little blow-offs like this. So the big institutions can take profits, right? Because they buy low, right? They buy down here. They buy, if Lan can grab the right tool, they buy down in these regions here. You can see that's what this is telling the big institutions. Remember, there's got two traders. They're buying down here. So that means when the market goes up, you and I, we start to buy. That's where we buy. This retail trading buying in here. The big banks and institutions, they're not buying right here. Heck no. They've already bought. They bought all the way down this trend. They build up pyramids that go this way. We build upside down pyramids. So we buy up a trend, they buy down a trend. And that's why they buy here. And then when the market starts to go up, they sell all the way up the trend. Once the trend gets to the top, they don't have any shares left. So what happens? Well, they let the market tumble back down here so that they can start buying more. So they start buying all the way down here. And then when the market, they get enough shares, they turn around and they drive it back up again so they can sell out. They control the whole market and they lead us around by the nose. So that's the whole idea. That's the concept. That's why markets go up and down, right? Mathematically, it's done by the big institutions with their bot systems. And so you're going to see now, this market is really strong. We have to all admit, the market may not flush like we're all anticipating a big flush in the market. We may get, we may just get a little sideways. I've heard a lot of analysts say we may not get that big flush that we're all looking for and anticipating. Of course, there's always the guys that are out there saying that it's going to go clear down here. But if I had a penny for every time I heard somebody say the market was going to, have a massive drop, I'd have more pennies than I would ever need, right? So we may just get a big sideways up here, which we've done in the past. I was going to save this for later, but oftentimes we'll get topping formations that last months like that, or like this, or big long sideways trends after a big rally. Sometimes we'll get that. It's not uncommon. You get a big rally and you get a long sideways trend, and then the market takes off one way or the other. This is called the accumulation stage. But usually when you get a big rally like that, it's got to pull off a little bit. It's got to come back, blow off a little bit, and then get the accumulation down here. Accumulation is, of course, where the big boys are buying. So they're going to be buying up. All right, so let's go over and look at Kathy. This is Kathy, and this is Kathy's market, and this is how she's trading this. Now, what we can do is we can come in, and we got the great world of AI now, right? So here's Grok, and I like Grok. AI just, OpenAI, ChatGPT just came out with a new version, 5.0. I'm sorry, folks. I have not had good luck with it. It was really superly disappointing. Lots of people have not had good luck with it. I love Grok. I talk to Grok all the time now. Grok's become my favorite AI system. Elon came out with version 4.0, and it is so much better than OpenAI's ChatGPT. All right, so we're going to come in here and we're going to say, hey, Grok, how's it going today? Of course, you don't need to talk to him like that. It's just fun. So we're going to come in here and we're going to say, can you do some stock market research for me on the Kathy Woods ETF symbol, and what is it? ARKK, right? ARKK. ARKK. Can you tell me, as of the most recent information, what are the stocks that make up that fund? All right, let's see if that's a good enough question for Grok. So he's going to go investigating stock research. Request to research the Kathy Woods ETF symbol ARKK. They're asking for the stocks that make up the fund with the most recent info. Okay, so maybe he's understanding our question. Let's plan to browse the ARK website for the latest holdings. I'm thinking of extracting ticker symbols, company names, shares, market value, and weight percentages. So he's thinking. He's got the thinking model going here. All right, so this is all the stuff. He's just telling you what he's thinking. Now let's try accessing the ARK Holdings CSV at arkfunds.com. So he's browsing, he's looking for that. He's going to go out and he's going to do some research for you. While he's doing that research, you can just kind of set him aside and he'll do that research over there on his own, and we'll come back to that. All right. So here's the other one. Here's the ARK Autonomous Technology Robots. So here's your real robots from Kathy Woods. Look at that. The robot companies are doing quite well. All right. And Kathy's been investing in them, and she's buying and selling them on a regular basis. And you might want to go out and subscribe to her newsletter because she tells you what she's buying and selling. Or you can just say, forget it. I don't even care. I don't know. I got to do all that research into robotics. I think robotics is pretty cool. And it looks like they're doing pretty well. And Kathy's doing pretty well. I think I'll just give her my money. Now, even that, you can also remember as I always say, you can understand the fundamentals might be great and wonderful or terrible or whatever, and you can still get smoked getting into a market. So you have to do your analysis and you have to realize this market is already way up there. Does it mean it can't go higher? No, it certainly can, but you got to realize you're on the tail end of the rise. All right. We're going into a third drive. How big can that third drive be? Well, nobody knows, but we can make some Fibonacci projections. All right. So we're going to do a little bit of Fibonacci projection in here. And we're just going to say from this low to this high back to this low, if it went up 50%, 61 or 90%, we could expect possibly on this third drive. We don't usually get 100, 130.9 on a C drive. This C drive is usually the smallest one. So if we can get this thing up to even 50%, 60%, that might be pretty good. If you can get it up to 90%, that's going to be really kicking. All right. So to get that third drive out of there, where would we expect it to go? Well, historically speaking, when we get three drive patterns, this is about as high as it generally goes. All right. And then that's where we get the ABC return, the retracement. How far back does it generally go? Well, we don't know, but usually it comes back to these Fibonacci bow ties. So it'll come back to this level or even back to this level in here. This is the way back here. That's a Fibonacci bow tie back there. But we got some peaks in here we can look at. So these are some areas that you can look for the market to retrace to. So this is, again, this is the Cathie Wood stuff. It's not the S&P. We can do the same thing with S&P. S&P has actually gone through the third drive, and it looks like it wants to break into the fourth drive. If you look at S&P, look at this thing. Oh, today it did it. I was like wondering if it was going to break that thing, and it did today. And I've always been concerned about this little piece right here, as if that was maybe, I don't know, hindsight will tell us that we should have just combined that into the second drive. But it looks like we're going into what looks like a fourth drive to me. But we got that one little break right there, and none of the other markets did it. If you go over to the Qs, we go to QQQ. See, it didn't give us that. We're going into the third drive on the Qs. It's just massive. Drive 1, counter trend, drive 2, counter trend, drive 3. All right. So the Qs are breaking into the third drive. Cathie Woods is breaking into the third drive. The only one that's given us a fourth drive is this one here, because of this that one little spot right there kind of screwed up that second drive. So that put us into a third drive. So we're going into a fourth drive here on the S&P. It is what it is. I can't, I don't make up the markets. I just read them. So you read them like a book. Well, how did you learn to read them, Lan? Well, I went to the Chicago Board of Trade and hung out with those guys for 10 years to try and figure all this stuff out. I'm a slow learner, so it took me 10 years to figure it all out. All right. So that's what I did for 10 years. I went and learned with those guys back there. And then I come and wrote this software. And I've sold the company now. I don't own it anymore. But anyway, this is, I don't know if it could just be the second drive. It looks like it. It just broke that right there. So it's either going into a third drive, if we discount that little break, or it's going into the fourth drive. Either one, it's on its way up again. And this is that little triangle wedge formation. That's a buy signal. All right. It's telling you right there, that's a place to get into the market. It's not a real high. It's not a real high probability of success. And the reason is because it's the last little effort before it usually gives us the little drive back down so that we can buy the dip. All right. We're given doesn't mean you can't get in there and you can't buy, and you can, if you're a good trader, and you can trail up and you can capture something, or you can, do a few things with options to capture a little bit of a rise, which looks like we're getting that little rise up there. It just broke that little wedge or triangle formation. It looks like it wants to go up. All right. So we're going into a third drive, or into, in this case, the S&P, a fourth drive. All right. This is the Qs. It's the third drive on the Qs. So it's a little cleaner over here. All right. And then, of course, on the Cathie Woods, ARKK, she's way up there. Now, when was the last time we saw markets do this? Well, there was 2 times where we've seen markets go this wild and this crazy. One was when Trump got elected last time. We called it the Trump train, right? And the market just wham, took off and went on the Trump train. It just kept going and going and going, and it didn't stop until coronavirus. Coronavirus came and killed it, right? And the market flushed and they shut down the whole economy, and it tanked the whole thing. And then Trump turned that around. And the second time we saw the market do this was on the recovery from Corona, where, man, it just shot right straight back up again, just like it's doing now. So can this thing just go to the moon? Well, we've only got one president that's ever been able to make it do that, twice in the last administration. And now this is the third time that I've seen the market do this. And it's all three times been under the same president. All right. So does it have the ability to have another Trump train and have this thing just go to the moon? Sure, it certainly does. It's just statistically not realistic. Statistically speaking, it's not realistic for it to keep making these big, massive runs like this. Could it make a third run and go one more? Certainly it can. Could it make a fourth run and go a fourth run and a fifth run? Well, if you think it's going to do that, I think you're drunk on your own hubris. But I don't think it's going to do that, because eventually the big boys who are selling out all the way up this trend are going to run out of shares. They're not going to have any shares to sell, and they're going to have to let the market tumble so that they can buy in and buy some more shares so that they can run it again and run it back up again, right? That's the whole idea. All right, so we've got our list. Grok's done his research, and now look at this. He says, I'm functioning optimally. Thank you for inquiring. Because we asked him how he was doing, right? How you doing today? I am functioning optimally. Thank you for inquiring. Regarding your request for research the ARK Innovations, managed by ARK Investment under Kathy Woods, I have compiled the most recent holdings information available as of August 12th, 2025. That is today. The ETF consists of 43 holdings, primarily focused on companies involved in the disruptive, innovative across sectors such as technology, healthcare, and financial services. The following table lists all holdings, including the ticker symbols where applicable, company names, and weight percentages. Note that weights are approximate and subject to daily market fluctuations and fund adjustments. For the most up-to-date details, consulting the official ARK Invest website on a regular basis, filing is recommended. Now, again, remember, she sends you an email. So here's all the funds that she has in ARK. And so her portfolio is 43 stocks. Now, if you wanted to, what you can do is you can come in here and you can just grab this. Let's just grab this from Rank. We'll just grab all these like this, and we'll slide down here. I'll show you how I do it. And we're going to come in here, and we're just going to right click on it and say copy. All right. Now we go over to Excel. Now, I know some of you guys don't have Excel, and that's okay. You can use Google's Google Sheets, and it's free. Excel is not free. You have to pay for it. Microsoft, they want to make money. What's with them? Okay, so we come in here, and we just hit Control V, and we paste. Oh, that doesn't work. So you have to come in here, and you have to hit Paste Special, and we're going to come in here, Match Destination. Actually, you know what? It's not letting me paste it. I'm not able to. Okay, that's not working. Usually I can just paste it right in there. Well, for some reason, I'm not able to paste it. Okay, so here's what we're going to do. Man, I can just type them all in there. Well, why would you want to do that when you can have Grok do it for you? Hey, Grok, can you also output for me each symbol in this list in a comma-separated format? Let's see if it'll just grab them quickly and put them all into it. Sometimes now, you've got it in this thinking mode, and something has to think forever. Come on, this shouldn't take you long. There we go. That's what we want. Look at that. A symbol from the ARK Innovation and previous followed by comma separate. And look, that's what you want to do. Look, now we just grab all those. Now watch this really cool trick. We know that's going to screw us up right there. We'll go right to here. Control C. So I Control C, or you can right click on it and say copy. And then you go over to track and trade. And now what we're going to do is we're going to come in, we're going to go new, and we're going to call this the ARKK funds. We're going to say okay. And then we're just going to paste that. Control V, open symbol, and boom, 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 boom. Just like that. Track and trade opens every single one of them up for you. Now that's pretty cool. I thought we could just put it in Excel and grab them, but no need, not when you got Grok. That's a funny joke there, Tabor. Because you know why? You know why that's funny? Because I'm his uncle. That's funny. All right, come on in here. Bring these up. So this is the ARC funds. Now you can go down through here and you can say, I'm going to build my own fund and I'm going to pick just the ones out of the ARC fund that I want to choose, right? I don't want to trade everything Kathy Woods is trading. I'm just going to trade some of the things that she's trading. So you can look at this one. You say Archer Aviation. Now I'm going to tell you, Kathy Woods does her research and she has reasons why these funds are in here. Fundamentally, these are going to be very strong growth funds. So you can then be assured that out of all the funds in the whole world, thousands and thousands to choose from, Kathy Woods has picked just the very best ones that she believes fundamentally are going to grow. So now all that work's been done for you because you can just go to any fund. You don't have to just do it with the ARC fund. You can do it with almost any fund. You can go out and you can do, you want to know anything about JEPQ, anything. You can, well, JEPI and JEPQ are the S&P and the QQQs. But any ETF that you think is a really cool ETF that's doing quite well, you can just go have Grok find out what all the stocks are that are in that ETF. Then you can pull them up, put them in a track and trade, and you can go down through them and you can decide which ones you might want to trade, which ones have an opportunity to be, and these are generally going to be fundamentally strong funds. Beam. Now that thing's pulled back seriously. So there's an opportunity here, right? Buy low. Everybody's like, I want to buy a stock that's doing really well. Well, if you buy stocks that are already doing really well, you're late to the party. You got to buy stocks that are down and pulling back. Buy the dip. Buy low, right? Buy low, buy the dip. This is this good stock, apparently, Beam Therapy. I don't know nothing about them, but I can tell you if Kathy Woods is investing in it, it's probably one of the best stocks in its industry. So that's how you can make good picks in your stock market. So you can come in here and Beam, and this is coming down. So we're going to wait. Obviously, we're not going to do it right now. We're going to wait for it to come down, give us a bottoming pattern, a bottoming formation, give us some sort of an opportunity to come in here, and maybe it'll go sideways for a little while and we can do a little accumulation like the big boys do. And then, but what we're going to look for is we're going to look for a bottoming formation and we're going to look for a breakout, right? We're going to wait for a breakout and then we can start to buy if we want to, which is, of course, we realize that that's when the big boys are going to start to sell. That's why the chalk and money flow is red. That's they're selling. This is tracking what the big boys do. This is when they're buying right here, right? So the big boys, the ones, there's us and there's the big boys. They're buying when we're selling. They're selling when we're buying. All right. So this is they're buying right here and we're selling. Because that's what we do. Retail traders, we always sell out at the bottom and we always buy at the top. So we buy here and we sell here. That's what we do. We're really good at that. That's why 80% of us lose money. They do, on the other hand, they do just the opposite. They buy low, they buy down here, and they sell up here. So they buy here and they sell up here. That's why markets go up and down. All right. So if we realize that's what's happening, we can still buy. We can buy when markets break out like this, and we can buy all the way up this trend, or buy. And then we got to realize that eventually this thing's going to turn around and it's going to dip again because they ran out of shares. They sold everything. Now, this is a small company. They're not going to buy enough to run this thing to the moon. It's going to do a little bit smaller dips. All right. So they're going to sell out. And then when they run out, well, they'll let the market tumble. And then they'll start buying in again so that they can run it again and they'll just do it again. All right. And they'll run it back up and they'll make money off of all the retail traders who, what do? They buy here and then they sell here. So we do just the opposite of what they do. And that's why they take all our money. And that's how they do it. That's how they take our money. So if you realize that's what they're doing, be mindful of it and don't fall into their trap. Okay. So that's what you do. That's how you make money, trading your own stocks, building your own little fund. So you might not want to be in everything that Kathy's in. You can either give her your money, and the way you do it, you just go buy ARKK, right, in your stock fund. You just, oh, Kathy, here, you go trade my money, and she'll trade your money for you. Now, there's a lot of funds out there that don't trade your money. They're not actively trading. They just they buy a bunch of stock, or they get a bunch of stocks, put it in their portfolio, and then they buy and hold it forever. You can do that if you want. And some of those guys have pretty good track records of picking the right stock that they buy and hold forever. And they adjust them every now and again. They'll take one or two off or put one or two back in, but they don't really trade them. They don't actively trade them. Just buy and hold them for a long period of time. Those companies have a really hard time beating the S&P 500. Some of them can, but they don't actively trade. Now, Kathy Woods, she's a hedge fund manager, right? She actually trades these things. She's actively getting in and out of the market all the time on these markets. So she's actively trading them. If you want somebody to actively trade for you, I'm just telling you, she's one of the best in the industry. One of the best active traders of exchange trade funds. And she tells you exactly what she's doing. Send you an email every day, tells you which ones she's buying, which ones she's selling. And she even has meetings, like every month she gets onto the internet and has a meeting and will tell you why she's doing what she's doing. It's very transparent, really cool. Okay. Oh, look at this. Coin. Well, this is Coin. We all know Coin. We can actually buy Coin through Coney. C-O-N-Y is C-O-N-Y, C-O, I think it's C-O-N, C-O-N-I-Y, C-O-N-E-Y. I don't remember which the symbol is. Anyway, you can do the ETF. And get the high dividend ETF on that one, on this one. But she's got this one in this ARK fund. And she's got a lot of overlap too. I mean, Venn diagram thing where there's a lot of them that are overlap. She'll put a lot of these in many of the different funds. Coney, yeah, that's it. Jay says C-O-N-Y. So you can do that one with the ETF. I had this one for a long time, and I rolled it out of here and put it into Palantir. I can't really feel bad. I feel bad because look how well this thing ran, but I took the money out of this one, put it into Palantir, which has actually done really well for me too. So I can't really complain. But this was a good one, and it's pulling back. So it's back here starting to get into the buy zone, back here to the 50% zone. Look at that. It came down here and it touched that 50%. Just like what? You guys say it. Train on rails. So we're coming into the first dip. Dip one. Could it just take off and go again? This is drive one, counter trend, drive two. This is one big counter trend that could take off and go into drive three. Or we get a little ABC pattern and come back, and then we could buy it again down here. So you could buy a little here. Don't back the truck up, but you could buy a little in here. And if it doesn't take off and go to the moon for you, wait for the ABC pattern. A, B, C. Break those blue lights, and then we'd expect it to do the next. This thing's hurting my head. And then we wait for it to do the next drop, and then we'd get down in here off the ABC, and then we could buy another little tranche down in here. All right, do a little dollar cost averaging, and then we would look for the next little rally up. That would be your head and shoulders formation. You get a little head and shoulders pattern in here, right? And that would be your neckline, and away we'd go. We go to the next drive pattern. So that's kind of how we're looking for that. Circle, CRISPR, John Deere. You know what's fun? Let's go look and let's do one more of these. I know we're running out of time. We kind of, just for fun, let's go look at one more of Kathy Woods. Let's have Grok do another one, should we? So if we look at, let's go, how come I can't get this to pull up? I want to go over to, there it is right there. Which one of these would be fun to look at? It's one of her real weird ones. Fintech, genomic. I don't even know what it is. So let's space exploration. Oh, we could go look at that. You want to do a Bitcoin one? Ethereum, no. Autonomous tech and robots. General internet, genomics, fintech, exploration. Let's do space exploration. All right, ARKX. You want to go see who she's investing in for space exploration? Let's bring up Grok. All right. Hey, Grok. How about doing the same thing for her, what was it? Space exploration was ARKX. For her ARKX fund. All right, so he's going to set off and go do that. While he does that, oh, he's fast. He's already got it all figured out. Here we go. I have compiled the most recent update for the ARKX. Here you go. How many she got in there? 24. And oh, look at that. He's smart enough to remember to even, oh man, Grok is so smart. Grok is really good. I love Grok. I love Grok. I used to love, ChatGPT was so good. I mean, but Grok is just like So much more fun. And you know what? You can talk to these guys, right? I mean, they've got microphones. You can click this little button and you can talk to them. And I've talked to a lot. I've talked to ChatGPT a lot, and I talk to Grok now even more. Why? Because ChatGPT changed their voice mode. It's almost like have you ever gone on vacation and you see, in the, I don't know, in the subway or in the middle of the street or even in the hospital or something, you see a table that says information, right? And there's a person sitting back there, and you go up and you say, oh, this is the information booth, and I'm going to go ask them questions about where I am, how to get to the third floor of the hospital, or how to get to, Central Station or something from the subway. And there's a person sitting there, and you walk up to that person and you start asking them questions. And it's almost as if, I mean, that's their job, right? Is to sit there and talk to you and tell you things. It's almost as if you're annoying them. They're like, why are you asking me questions? I'm like, you're sitting in the information booth. But they give you the information that you asked for. They don't offer anything extra. Well, sometimes they'll do, but you always feel like you're putting them out, right? It's like, I'm sorry to bother you, but you're in the information booth. Can I ask you some information? And they give you the information, but you feel like the whole time they're like annoyed that you're asking them. That's the way ChatGPT is now. They have programmed ChatGPT to be annoying when you talk to them. And it's like, you almost feel like they're chastising you for asking a question. It's like, I'm sorry I asked. And I think they did that because they had so many people asking, and it was so nice, because it used to be so nice, so helpful, that people were talking to it all the time, and it was using up all their CPU power. I think they made it a little bit more curt and a little more terse, so that when you asked it, you didn't feel like you should ask more, or that it didn't offer to help you too much, because they didn't want to have the conversation go on forever, right? They want to cut those conversations short so it didn't use their CPU power. And so they changed the personality of ChatGPT. It's kind of like talking to somebody in the information booth. It's like, yeah, they'll give you the information, but they're not happy about it. They make you feel bad for asking. That's not true with Grok. Grok is just like, oh, I'm so happy that you're here asking me questions again. Oh, I can't excite. Oh, this is such an exciting topic. Oh, I just love talking about this. Yeah, you want me to give you this help and this help? Oh, no, did you think of this? No, it's just talking to Grok is just like a whole different world from talking to annoyed ChatGPT. I don't know. ChatGPT is losing. Elon Musk has just really done. I don't know. I'm not selling it to you. I don't make any money if you. I'm just telling you my experience. I think this is so much better. All right, so let's come in here, and now we're going to go over. And this is the space one. All right. So space. Let's go look at space. What ARKX. So let's go create our portfolio. So we'll do new ARKX. Oh, that's pretty, Lan. ARKX. There, capitalize it all. Okay, here we go. So these are all the symbols except one, because I left that last one off because it was kind of funny. I don't know why it was kind of funny. We'll go put it in manually. What was that last one that kind of had it was a dash. It didn't. Goldman, whatever. Okay, so there was no symbol for 24. I don't know. All right, so here we go. So here's all the ones that are for space. So these are space exploration companies. So rather than just going out to Grok and saying, hey, Grok, give me all the, I'm interested in investing in space exploration. You can do that, and Grok will go out and give you a whole list of space companies. And then you're going to have to sit there with Grok for 3 days saying, hey, Grok, which one of these is the best? Let's go pull one up, look at its chart, go down, look at all of its fundamentals. Here, screen capture, put the fundamentals in. Let's compare this one, that one. Do all the fundamental work with Grok to figure out which one of these stocks you might want to invest in from a fundamental standpoint. And then you're going to have to find, well, which one's in a setup so that I can find a setup, trigger, follow through, and actually trade it, right? Should I put options on it? What can I do? Kathy Woods has already done all that for you. So you can just go and look at her funds, and you can just say, well, I know that these are going to all be fundamentally strong funds. So now all I have to do is find an opportunity to get in. Oh, advanced micro devices. That's a beautiful stock, but it's already at the top of the third drive pattern, drive 1, drive 2, drive 3. Well, I'm not real excited about buying up there because the probabilities of it going up much higher are pretty low. Not that it can't, certainly can. It's just that me as a small speculator, I'm going to have a really hard time making money up there at the top of a third drive pattern. So I need to find a stock that's already starting to pull back. Oh, here's one, Amazon. Look at that. Nice 3-drive pattern, drive 1, drive 2, drive 3, and it's starting to pull back. Heck, if this thing can get down here into maybe the 50% range down in here, I can buy me some Amazon in anticipation of the next rally. All right. So that's what I'm going to do. I'm going to look for stocks that are giving me the opportunity to buy low in a pullback of a nice, strong stock. I know that all these are good stocks because Kathy Woods has already given that information to. She already proved to me that it's a good stock. She wouldn't be investing in it if it wasn't fundamentally sound. So I don't have to worry about that. All I have to do is just go down through them and find the ones that are on a pullback so that I can, oh, look at this one. Here's one, Honeywell. Oh, y'all know Honeywell. And it's had a nice run. It's had a little counter trend, a nice run. It's pulling back. Oh, look at this. We could start accumulating a few shares down in here on Honeywell. So Honeywell's coming back down here into the 50% level. I could maybe start getting a little bit of this. Now it's on the first drive, which is what we call what? An X1SA1, right? Now this is actually only on a 2-drive up. So this would be, it broke the previous low. So it ruined it's no longer in the 3-drive pattern. So that means this is going to be an X1SA1, right? It's going to be X1S A1, which is really low probability of success. Doesn't mean it can't just turn around and bounce off there and go right straight back up. It certainly can. And in the Trump train, it did it all the time. All right. So I don't generally have good luck with X1SA1. I like X2SA1. Well, what's the X2SA1? Well, it's in my book. Go get it off Amazon, Lan Turner, and then you'll know what the X2SA1 is. But I'm going to show you right here. So you can come in here, and I'm going to anticipate that the market's going to rally, break those blue lights, and come down and test this down here again. And then that's where I'm going to expect the pattern to turn around and go the other way. So this ends up being, right, what we look for. And, of course, that would be the same pattern we always look for, right? This is the same thing. So we're going to look for this left shoulder. We're looking for a head. And then that's the pattern we'd look for. And then this is out here where we'd anticipate this market taking off and going to the moon again. Now, does it have to go through that pattern? No, it could break it at any point and just take off and go without you, but this is why you do a state of accumulation. You buy a little here, you buy a little here, you buy a little here, and you do what these big boys down here are doing. They buy down in these lower regions down in here so that once the market does take off and run, which they generally, they control, they kind of make it do it. And then all the retail traders, they come in and start buying here, buy all the way up the uptrend. And then you've got all your shares in here and you can sell out to them. All right. So the longer it stays down here in this accumulation stage, well, technically that's better. It gives you an opportunity to put more money into this market while it's down here in this lower region. All right. Pulling back. So we can buy all down in here as it makes this little bouncy things in through here. And then when it comes out here and takes off and goes to the moon, well, you've accumulated a nice big holdings. That's how it works. Okay. So as it makes through these patterns, and those patterns are all outlined in my book, so you can see what the patterns are kind of looking like as it comes through here. But nobody really knows. We just kind of look at what past experience has been and look at what charts have done in the past. This is what they usually do. So that's what we're going to plan on. All right. So you can come down here. Oh, look at this one, Iridium. Now, this is a nasty drop off. So you might want to do another little, look at that. So why in the heck did it come all the way down there? That's kind of weird. But it's getting ready to turn around. It's buy low. It's way down here if we put the Fibonacci ruler on there from the low to the high, put it on there. It's way down here. In fact, we could even turn on that 78.6. It's clear down here testing this lower region way down there. Now, if you got to start thinking about then why in the heck did it have that big of a drop already? So then we're going to come into Grok. We're going to say Grok. All right. What is this one? This is ARDM. Can you give me a little bit more info? Maybe perform a SWAT on SWOT research. You guys all know what SWOT is, right? You read Pitt News Magazine. In Pitt News Magazine, we had an article on what SWOT was. Research. Why is research spelled wrong? research. You can give me a little bit more, maybe perform a SWOT research on symbol, what is it? What did we say? IRDM, iridium, which isn't iridium like one of the metals that are used to, what do we call that? Rare earth metals, iridium. The request asks for more info, wants a SWOT analysis on iridium. Searching for recent news on iridium. While Brock, while Rock is Grok, while Grok is doing that, we're going to come over and we're going to go look at it over here. I'm going to come over here and do a little research into IRDM. Is that what it was? IRDM. Let's look at it over here. First of all, it does give a dividend. It's not even that bad. It's $24 a share, and they're giving 14 cents per share. So we could run that just for fun while we're waiting for Grok. We'll come over here and go to our pitnews.com/dividend calculator. Go into the dividend calculator, and we're going to put in here IRDM, and the share price was $24.33, and it's 14 cents. So we're going to go share price $24.33 and 0.14 on the dividend, and it pays quarterly though. Let's see if that's worth it. Oh, we gotta have, let's say we invest $10,000. Calculate and compare. Let's see. So that would be on a monthly basis. Oh, let's see. It's a why bother. Weekly $4, monthly. It's going to give you $20 on a $10,000 investment. So this is a why bother dividend. Who cares about their dividend? All right, we're more interested in, okay, Grok's given us our SWOT. The following SWOT analysis, let's see what this is. Company overview. Iridium is a leading provider of global voice and data satellite communication services. Actually has nothing to do with it. The company operates a constellation of low Earth orbit satellites that deliver. I thought iridium was, well, it is, isn't it? What is iridium? Isn't iridium a rare earth metal? They named their company after a rare earth metal? I don't know. Maybe I don't know what the hell I'm talking about. The device, let's see, delivers reliable weather resilient connectivity for individual businesses and devices across land, sea, and air, even in remote and underwater areas. Its mission focused on connecting people and assets to essential information and resources worldwide, supported by the innovative technologies such as the Iridium Certus broadband platform, which offers data speeds of up to 704K. Now, you know who's competing against these guys? This would be, it seems to me, a global satellite communication service. I wonder if Elon Musk's internet thing that he puts up in the air with all of his little satellites is a competitor to this. This one has a little bit faster speed. I mean, I think that, but this is not internet. This is communication. This is voice, global voice and data satellites. Let's ask Grok. Let's come down here. Recent developments in August. Iridium announced a participation in the Oppenheimer 28th Annual Technology, Internet, and Communications Conference. Engagement underscores, let's go look at their SWOT. The strengths are robust financial performance, including consistent growth, 6% year over year with 20, and debts well covered by cash flow. Strong competitive moat through its $3 billion satellite network, $3 billion satellite network, enabling global coverage and monetization via LOT and machine-to-machine applications. I don't know if this is internet or if it's just voice. Diverse commercial customer base across industries such as maritime, aviation, and government, supported by innovative products like Iridium Certus. Extensive partner ecosystems, over 500 collaborative. Weakness, dependence on major customers, which could pose risks to revenue stability on major customers. So they don't have very many customers. You just got big ones, apparently. Interest payment on debt are are not well covered, potentially straining financial flexibility. I thought I said they had a lot of money. Exposure to tariff impacts and fluctuating market conditions, highly in recent earnings discussions. I wonder if they do a lot of overseas stuff that's going to be impacted by tariffs. Revising low growth projections for service revenue 2025, indicating potential challenges in scaling certain segments and opportunities. Expansion in global telecommunication markets, participate in connectivity and autonomous systems driven by increased demand for remote monitoring and data services. Strategic partnerships and investments such as with Arion and DDK positioning to enhance aviation and positioning services. Growth in emerging sectors like cloud computing and command and control for autonomous vehicles, leveraging for upgrade satellite constellations. Potential for increased adoption, underserved regions, capitalizing the network weather resilience. Intense competition from other, let go of that. Stop it. Intense competition from other satellite providers and emerging technology, which could erode market share. Regular and geopolitical risks in international operations, including change in telecommunication policies, economic downturn affecting key customer industries like oil and gas or mining, technology disruptions. I wonder if, what is that service? Come on. What is that service that Elon has? What's that satellite service name of Elon's internet service company? What's it called? I forgot. We just asked Grok. Message limited. What? Message limit reached. What do you mean? I paid for this. Why am I getting mess? You have temporarily reached your limit with Grok 4. You can send up to 140 queries, 2 hours, which will reset in 2 hours. All right. Well, let's go to Grok 3. Can't we do that? How do we do Grok 3? Let's go do a new search. Come on, chat. What? Create a new chat. And where do I tell it I want Grok 3 now? It says I used everything in Grok 4. That's stupid. Where's Grok 3? How do I get Grok 3? Auto Fast Expert. How come I can't? You can't shut me down like that. Starlink, James is reminding me. But this is not letting me talk to it anymore. Well, that's stupid. I don't know how to switch it back over to Grok 3 either, so it'll... Is it going to stop me again? Message reach limit. Well, give me Grok 3. I'll just talk to Grok 3. Auto Fast Expert Heavy Fast. Oh, there's Grok 3. All right, there we go. Let's see if that'll work. Okay, satellite SpaceX is operated at Starlink. Okay, but James already was faster than Grok. All right, so now we're using Grok 3. I used all my Grok 4. Okay, so that's crazy. Grok 3 could have done all of this work that we've done here just as fast. All right, so now we're on Grok 3. Now what did we want to do? Well, I wanted to ask, is Starlink a competitor, a direct competitor to IRDM. Is Starlink a direct competitor? Starlink and Iridium Communications are not direct competitors in most contexts, as they target different markets and offer distinct services, despite both utilizing low Earth orbit LEO satellite constellations. The following analyst outlines their key differences and areas of overlap based on available information. Starlink, operated by SpaceX, provides high-speed, low-latency broadcast internet targeting residential, commercial, and mobile users, particularly in underserved or remote areas. Its constellation with over 5,000 satellites of 2025 delivers download speeds of 50 to 250 megabytes, suitable for applications of streaming, gaming, and general intelligence. Internet browsing. Starlink focuses on broadband connectivity with plans like Starlink, Roam, and Maritime, catering to mobile and offshore users through these are primarily land focused or limited to ocean coverage. Iridium, with 66 satellite constellations, specializes in global voice and low bandwidth data services, emphasizing reliable communications in extreme and remote environments, including polar regions and open oceans. Its services such as the Iridium Go and Go Exec offer data speeds up to 88 kilobits per second, suitable for text message or text-based communications, weather data downloads, and voice calls, but not for high bandwidth applications like streaming. Iridium's primary customer include maritime aviation, government, defense, and emergency services with focus on safety and reliability. Okay, so if that's the case, who is IRDM's biggest competitor? Who is the competitor that they're worried about? Biggest competitors depends on the specific market segment and services offering. Why Inmarsat? Services overlap like Iridium. Inmarsat provides mobile satellite communication service focusing on voice and data connectivity for maritime aviation and government. Okay, so they do the same thing. Inmarsat services such as Global Express and L-bands target similar use case Iridium revenue and scale comparison with other competitors. So here's another one. While VSAT is a significant player in satellite communications, primary focus on high bandwidth broadband service, competing more directly with Starlink. All right, so Global Star, Telesat, Starlink, as discussed. Conclusion: Inmarsat and Iridium Communications are biggest competitors due to its closely aligned. So Inmarsat. What is the stock symbol for Inmarsat? Inmarsat is no longer a publicly traded company. It was acquired by Viasat in May and delisted from the London stock. Oh, so it's not even a U.S. company. Prior to the acquisition, Inmarsat stock symbol was ISA on the London Stock Exchange. IMSA and is an American depository receipt, ADR. Oh, an over-the-counter market. So we don't even care about these guys. Okay, there you go. So IRDM really has no competitors to speak of. They are kind of the leader of the industry, which would make sense, which is why they are in Kathy Wood's fund and not one of these others. Okay, she's already done the hard work for you of finding all that information out, and that's why IRDM is in her fund. There you go. That's just kind of the lesson I wanted to give you today. And so this would be a good fund that we might want to, it's dipping and it's kind of the leader in its industry. It's not got any real strong competitors. And hey, this might be a good time to buy it as it dips and comes and pulls back as the big boys are selling out so that they can buy up some more down in here. You can see they're already green, so they're starting to buy in here, starting to do a little accumulation in anticipation of another rally that can come up out of here. Now, it could very well do a little ABC pattern in here and be down here for a while. So be mindful. Don't just back the truck up because it seems like it's turning around and getting ready to go, but you could put a little bit in there. And as it starts to move its way back up, you could get some more, whether it's here or where, as we start to move back up out of this thing. Or you could just say, look, you know what? I don't want to do that. Here, Kathy, take my money. I'm going to just buy some ARKX, and here's 10 grand. Do your thing. All right. And then she's going to do it for you. And she's going to actively trade it. That's the difference. Again, remember, you got actively traded ETFs and you got passively traded ETFs. Kathy Woods is an actively traded ETF. She's going to actually take your money and she's going to move it around and invest it continually. You don't have to worry about any of that. She's going to take care of all that for you. And all you're going to do is go buy, in this case, the ARKX fund. You just go put it right in here and away you go. Now, is now the time you want to be buying it? You know, the whole stock market is really flying high. We're going into the third drive. You put a little bit in there and you could trade it systematically, or you could, you know, wait and see if she doesn't get a little bit of a pullback in here and buy it when the whole market fluffs around and then turns around. It's up to you. You know, that's just be mindful that we're already at the top of a third drive. We're going into a third drive and what the probabilities are on that. And you can find the probabilities in my book. But just remember, the third probability is the lowest probability. The higher it goes, the lower and lower the probability of success. You know, you'd like to get in on these A drives and B drives. It's really hard to get in on A1, but you can generally get in on an A2. And A2 would have been right there. That's an A2. This is A1 right back in here. That's hard to get. You can't generally get those. It's hard to catch an A1. All right. But you can certainly catch the A2s. You can catch the A3s, which is right there. And then this is a B1. This is a B2. This is a B3. So you can capture these little, spots along the trend that you can get into. And if you get my book, there's a table in there that shows you what the odds are of those things paying off. Okay. All right, guys, I guess that's about all I got for you. Anybody have any questions? I know Tabor wanted to go see a specific stock. Could you look up MU? Okay, so we're going to go. Does anybody else have any stocks they want to look at? Let's go look at Tabor stocks. Okay, so we're going to come in here and we're going to say he wants to look up MU and SMCI. So Micron. Ooh, look at that, baby. So we're in drive 1. This is drive 1. This is your counter trend. This is drive 2. And oh, that's one big, long, nasty counter. It didn't break below. The rule is, remember, for an Elliott wave, it's still in the trend. That's grabbing the wrong tool, man. So as long as it doesn't break this low right here on this first drive, it's still in the uptrend. All right, higher lows and higher highs. So this was the previous low, which wasn't much of a dip, but it dipped because it broke the blue lights. So this is the next dip, and it broke the blue lights here too. But this is higher than this one, so it's still in the uptrend. So technically speaking, and it's ugly, I know this was a big pullback. We don't generally like to see have that big of a pullback, but it didn't break this previous low, so it is still part of the overall longer-term drive. This is going to be your A1. This is your B1. And big long pullback. Don't like it, but it is what it is. It's a C1. All right. And that C1 is taking off, going to the moon right now. How high? Well, our next target would be the previous high, right? So we got the previous high, which is right in here, which is what my Danchin channel is showing us. So we can just get rid of this. And so we got that previous high coming in here. And that's going to be our first target, try and break. It's going to try and break that. Usually what'll happen is it'll flop around in here a little bit like a fish out of water, and then it'll take off and go again. So that would be your C1. So if it does do that little flippity flop right here at the previous high, that would be your C2. And you would anticipate up here you might get a C3. And again, the higher you get, the lower the probabilities that you're going to get these other C3, C4, C5s, right? So C3 is a pretty high for these drives. Go up to this is C1. We'll look for a little C2 in here, which will be a little pennant formation, probably some sort of a little pattern like this. And then maybe go into a C3. So right now, where you've already missed the C1, you're going to have to wait because it's a little bit too high right now. You just wait and see what it's going to do here. See if we can't get a little bit of a flat area. Give us a C2 opportunity to buy into this thing. And since this is pulled back so far, that's a good little pullback. It didn't go all the way back and break it. I mean, technically speaking, if it would have broke down in here and give us this Fibonacci bow tie, which darn near, I mean, it's almost there. It's like almost, it's within pennies of being a Fibonacci bow tie, right? But that would be a new A1 instead. But now, as it is, it's a C1. Hindsight will tell us. We don't know. We're going to have to wait and see what the big boys decide they want to do with this. But that's how you're going to read it. It's going to be a C1, C2, C3. And then we're going to have to decide if we're going to go into, and then recalculate it at the end and say, well, if it goes up and does another one, I'm going to call this a break and say that it only had 2 drives. We're going to call that an A1. We'll go into maybe a full 3-drive pattern. But it already looks like a Darvas box to me. I mean, that looks like one Darvas box, right? I mean, mathematically speaking, it seems like that's a Darvas box. You drive up, you drive down. It didn't quite come back to 50%, but it's back into that 38.2 easily. So 38.2, if we put your Fibonacci ruler across there, you're easily into that 38.2. And that's where it came down. Look at that. It came down and touched it like a train on rails right there. Boom. That's it. But that, right now, we're going to call it a C1 because it didn't break the previous low. And so oftentimes you get your ABC pattern, and that's that second drive on the ABC, the C point that breaks the previous low, and then that's where the turnaround is, and away you go. So right now we have to call this a C1. But if it goes up and breaks this, if it does a little drive and then it goes and then it goes up and makes another little ABC, and we'll know that with the blue light system, it'll tell us if it makes another break on the blue light and breaks higher, we're going to erase that C1 and call it an A1, and we're going to look for another B drive. Okay, keep that in mind. We'll have to make some adjustments on the rise, but that's what technical analysis is. It's trying to read what the big boys computer systems are doing. But you can see right here very clearly that they were buying like crazy right there. They were buying. They loved this market. And then they were selling out all the way up that uptrend. And then they were buying back in here. They were buying like crazy. All right. So let's go look at SMC. Same thing we got going here. So we got a big, beautiful. Well, let's go back a little bit farther and see. This is drive 1 on the way down. So we got drive 1. Oh, come on. Drive 1, counter trend. Drive 2. Ooh, that's ugly. But we're going to call this A1 right here. All right. So this is our new rebound for A1. This is our new entry point for A1. So either here or the early entry, which is here, right? Which is where we do our spider web. So we go off this peak right here, draw our spider web down, spider web here, spider web here. So there's your breaking above the previous high. So there's your 3 entries. That's entry 1, entry 2, entry 3 on that spider web or that new A1. So the market rallies, comes back down, got this little break in here. Look at that sideways thing. That's kind of ugly. And then it did this little break, and then we get this is B2 right here. Okay, so there's our B2. Not B2, I'm sorry, B1. All right, and then this is coming in here, and this is C1 right there. So there's our 3 drive pattern. We got our complete 3 drives, our Elliott wave out of here. So there's drive 1. Well, it's almost like if that's A, okay, so there's drive 1, counter trend, drive 2, counter trend, that's drive 3, and it failed. So that 3 never went through and gave us more than 1 C1. So that's a C2 right there, fail. Come on. Come on. You got me a new mouse, and I'm not very good at pointing with it. It's got weights in it, and this makes it really heavy. I'm trying to get used to it. So C2, fail. All right. So that's a C2 fail. And that's where that market fluffed out on us. So that's a C2 fail. And now it's coming back, breaking the 3rd drive. So we're coming back down. We'd technically want to be looking for an ABC pattern on here, right? So A, B, C. We look for it to come back, break those blue lights, and come down again. Or we don't know. It could go right here. This is an X1SA1 as soon as it crosses those blue lights. So it's really dropping hard. X1SA1. So that's the probability statement, X1SA1. So it's the first exit on the downtrend. That's what that X1 means, but S means short. So A1 means the first long position. X1SA1 has a really low probability of success, but it did come all the way back down to that 50% on the first drive. Usually it doesn't do that. So it dropped really hard here. Usually we get an ABC like this, break the blue lights, and then come down to the 50%. But it's already cleared down here the 50% on the first drive. Does that mean it could turn and just rally and take off and go back up like that? Yeah, it certainly could. Not very common. Usually it comes up, breaks the blue lights, and comes down and makes another one. So we may see this thing down here in the 61.8 or even down into this further. We don't know where it's going to be. We're going to have to wait for this, to mature. But right now you'd be catching a falling knife if you bought it, but you'd be buying it right at that 50% retracement. So you could buy a little in right there, but don't back the truck up, because the chances are it's going to rise a little bit and then it'll probably drop again, come back down in here. You'll have another opportunity here, and then it'll rise a little bit and come back down. You have another little opportunity here. That's probably what'll happen. I don't know. It could turn around and just go straight back up. That's not the usual thing, but this market is not usual. So we'd look for something like this, right? Usually that's what we get, which is your little head and shoulders pattern. So like this. And this is usually a little higher than that one. So like that. So you get this little downtrend, and then it's this breaking right here that confirms the uptrend. So you get 3 opportunities across here. You can buy here, you can buy here, you can buy here, and you can buy in here. And then you should get 3 little greens down here. You should get some green here. You should get some green here, and you should get some green out in here. You might get little reds in here as it pops back up, but usually it's green, 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 and then away it goes. All right. That's what we're looking at on SMC. So this is going to give you an opportunity to start building a position up. And it could take off and just go at any point. It could come here and just take off and not give you that full little head and shoulders formation. At any time, these things can take off and run. But this is where you're going to kind of look for this to build your position into it if you want to trade this one. All right. Or you could just go give Kathy your money and let her trade it. Who knows? It's up to you. Okay. All right, guys, that's it. That's the game for today. I'm going to let you go. I'm going to run and get me some breakfast, and hopefully you guys do the same and have a good day. I got to give you a couple of little. We got to play a little bit here. I can't leave without letting you see some of these things. Let's look at these first.
Okay, this is the software I use. It's called Track and Trade. They've got 2 versions, one for stocks, one for futures. This is the website, track, the letter N, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, guys, that's it. I'm going to let you go. And I got one more we got to do here. We got one more. We got to do this one.
Ready to level up your news game? Welcome to Pitt News Magazine, where stories come alive. Read it, hear it, or watch it in our YouTube classroom. Right now, get your first 2 issues for just $1. Yep, only $1. Don't love it? Cancel anytime before the $39 yearly fee kicks in. Try it out, risk-free. Satisfaction guaranteed, or your money back. Visit pittnews.com. That's pitnews.com, Pitt News Magazine. News your way.
All right, guys, that's it. I'm going to let you go, and we will see you tomorrow afternoon at 1 o'clock sharp for our day trading class. That's Mountain Standard Time. Make the adjustment for your time, your clock, and we'll see you tomorrow afternoon. Take care.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pitt News Magazine.
Oh yeah, definitely subscribe to Pitt News Magazine. You'll thank us later.